Hello, Travis with Tetelestai Bookkeeping and Tax, talking today about estimating the profit on a flip. Let's take a look. So say that we're tracking our flips on the P&L, profit and loss, the income statement, and we're looking at them. They're booked under a cost of goods sold. So we have our purchase price. This didn't fill in all the way. Buying costs and holding costs and rehab costs. And then we have our debt service down here. If we look at it in projects, okay, so we have all our costs here. We have a negative for our profit. And of course, that would match up here. And let's say that we want to estimate our profit. There could be a number of reasons that you want to do this before you finish the project. You might want to see how much your equity partners are going to get paid if you have those. You may be wanting to make a decision on whether you actually want to sell it, or whether you want to hold it. All kinds of different reasons. You may want to provide seller financing if you sell it, etc. So we're going to do this with a journal entry. We're not going to worry about the date now, but first we'll put in the sale price. That'll be income. Increase income by credits. And let's say we think we're going to sell this property for $350,000. We need to put in the customer so that it shows up under projects, and we're tracking classes by the address of the flip. So we'll put that in there. And then selling costs. And this is cost of goods sold, and cost of goods sold, like expenses, are increased by debits. Let's say that we think we're going to have the same, or we're going to have 30,000 there in selling costs. Usually higher than buyer costs if we are using a real estate agent. And next, we're going to create an equity account. I already actually created it, but it's just an equity account for a phantom sale. In other words, it's a temporary account. And we're going to go ahead and put this in here again. Save and close. Now let's take a look at our project. Now we can see our income projected, all of our costs. There's our estimated profit. Really simple. If we look at it on our P&L, refresh this. Okay, so now our net income matches. And if we look at our balance sheet, refresh this. There's some other transactions in here because this is just a sample account, but we'll see the general idea. Most of the net income flows through there, and you see the equity account. And of course, if we want to just go back, then all we have to do, you can always click on your history. There's different ways you can get to your journal entries. This is a simple way, and you can just delete it. Or you could go in and change the price, right? So you could leave the journal entries, change the price to run some different scenarios. We're just going to delete it. And then you'll be able to see in your projects, you're going to be back with that negative profit, our P&L, again, the negative as well. And this will be There, you refresh this. Let's see. No, I still have that phantom. It'll be backed out of the balance sheet as well. Negative income, most of that's, of course, the negative net income is mostly from the cost of goods sold. So that's a simple way, fast, easy to estimate your profitability on a project. Of course, you need to be using the project feature, and you need to be using classes, you need to be using customers. But if you're doing real estate investing, you should be using those anyway. So you can really see what you're doing and what's going on in your business. And the more you can do all of your computations, all of your numbers in QuickBooks, it's going to save you a lot of time rather than using a bunch of separate spreadsheets and going back and forth. Hope that helps. Any questions, comments, concerns, conundrums, post in the comments and I'll be happy to answer. And any other things that you want to know about, I'll be happy to answer those and make a video about it. Thanks.